We're having a phenomenal year. I mean, overall for the year, the top 5 is up about 35% overall. And so, if you're not familiar with the top 5, you can always go and check out one of our videos and it'll tell you exactly where they are. So it looks like we are up and operational here on mute. That's all good. Let me close this down. And so, okay, let's rock and roll. Hey, if you guys, let me go start the recording. Okay, good morning, good afternoon, depending on where you're at. This is Dennis Wilburn, founder of Active Trend Trading. I want to welcome you to How to Make Money Trading Stocks. This is our live video conference that we do every Friday at 11 o'clock Pacific time, a couple hours before the market closes, if you're joining us. And what we try to do in this is we try to, one, provide a couple of stocks that you might want to take a look at going into the week. I'm going to be talking, I know Steve's got a couple of stocks. I like apps better than the other ones, Steve, but we'll show the charts on both of them. And then briefly, I'm going to be talking a little bit about, what do you do if you own Tesla or Apple and they split on Monday? What do how are you going to handle that? Or maybe you don't own it, but you'd like to potentially get in. I want to talk to you about what they call post-split depression. Yes, there is such a thing. Yes, it is treatable by having a proper trading plan. So let's move along here. If you are joining us for the first time, now I would like to remind everybody that what we do is for training purposes, and we do record this and we post it to the YouTube channel, and then of course for top 5 just for our free members to Active Trend Trading, you can also find it over on our website, which you get access to. Here's where we're sitting at about 9 o'clock this morning on the 28th. Look at this. The Dow is finally in the positive, or at least it was. It may float back down below being positive for the year, but it was at 9 o'clock this morning. S&P also starting to stretch its legs a little bit. The NASDAQ continues to just rock and roll and run and all kind of stuff, very interesting. And then Russell, down for the year, down from the high from last year, but I'm really proud about how Active Trend Trading is doing. We're up over 50% for the year. And we do follow 2 different strategies. One strategy trades stocks and ETFs. The other strategy, we do basically spreads, both credit spreads, but primarily debit spreads. And so if you want more information, hey, drop me a note, shoot me an email, and we'll show you how to get hooked up as a premium member there. So overall, Active Trend Trading up year-to-date comparison with S&P, 42%. And so, but now let's get into the meat of the show. We're going to talk about what stocks this week. But before we do that, I want to basically go into what are we looking at for the markets. One of our objectives for Active Trend Trading and this video webinar is one, to provide traders with top-notch market analysis every week, providing timely, actionable intel that helps clarify and simplify trading decisions so that you can multiply profits and minimize your risk. That is basically the objective, and has always been my objective since I started the business back in 2007. And so let's get on to what's up next. One, my market overview this week, getting more extended. We're expecting a pullback in September. That's normal, because as we spoke, I think I posted a video to Instagram and Facebook this past week that talks a little bit about, if you missed the initial move in the market, because the market has been really rallying wonderfully since March, there will be another chance we should get some weakness in September, hopefully a pullback into a strong level of support, and POW launch into the end of the year. Should be interesting to see how the elections affect that. But let's see, as I said, pull back in September. But remember, trade the chart that's in front of you. That's the objective of what we want to do. So let's jump into taking a look at some stocks and taking a look at our indexes. First, let's start with the S&P. One of the things I've laid on the S&P here, the daily chart is on the right, the weekly chart is on the left. I love to use what they're called Keltner channels, and basically it's based on a level away from the let me close, there we go. From away from, in this case, I'm using the 20-day moving average, and it measures standard deviations. Unlike the Bollinger Bands, it does not show the shrinkage, and so that's one of the reasons why I like it. But one of the things we know about using it is when, and typically I have two lines on here. Here's the 20, here's the 2 times or 2 standard deviations away from the 20-day moving average. This purple line on top, and there's a red line on the bottom to correspond with it, is the 3 standard deviations away from the 20. Why is that important? Why does that, or why do we want to be aware of that? Is one, 95% of all price action on every entity will typically spend 95% of its time inside the 3 standard deviations away from the 20. It spends 90% of its time inside the 2 standard deviations. And so oftentimes when we see a situation like this, I'm not saying that we're going to go into a major pullback or major fall from the sky, but when price actions get outside that 3 standard deviation, stand by. There could be a pullback in the, in the future. What's the future? That's going to be interesting and a lot of technical guys will basically say, okay, when do I know we may get a pullback? Is when price action close below the 3 standard deviations from the middle line. If you trade with Thinkorswim, this is available. This is, the Keltner channels are available on the charting program, but it's very interesting. So what are we anticipating? Weekly wise, we're getting nothing but, hey, we're moving to the upside. A pullback, I would look for a pullback right now. This is the way I'm going to trade this, even though we are extended way above this. I'm going to look for a pullback back to about the 20 or maybe in between the 20 and the 8 on a daily chart, which puts us right about the breakout level at about 339. So that's what I'm looking for on the SPYs. Again, taking into consideration that the indexes tend to show weakness during the latter part of the year. Okay, what about our buddy the Qs or the NASDAQ? NASDAQ showing similar type issues. And here's a perfect example of what tends to happen. Look at what happens. You get a move up, hugs the 3, it moves above, closes back down. That was an early clue that the market was going to go into a more significant pullback. What's the other clue? Basically, you get a move above the 3 standard deviation, then you go back and retest the 2 and it fails. That's the next clue. And if you like this particular indicator, I'm going to be doing a presentation on it for the Bay Area Moneymakers on Saturday the 12th, and then it starts at 9 o'clock Pacific time. You can find out more about it by going to Bay Area Moneymakers or the BAM, BAMM. That is a meetup group that I sponsor. That's actually out of San Jose, California, when we lived out there. But if you want more information about it or would like some additional training, just let me know. So Qs, again, we're overextended. What happens when we get overextended? We tend to get a pullback into the either one of these, the 8 or the 20 or the moving, the basically this trend line, which we've got 3 levels where price action could fall off, stop, and then rebound from there. And what is the other one that we're keeping a little eye on? IWM. IWM again continues to be the laggard. However, we're getting some positive signs on IWM. It is clearly not extended. And so what tends to happen now for the month of September, this may drive sideways and just ping pong between the 8-day moving average and the 8-day moving average up here and the 20-day moving average here. And so it may just ping pong between those 2 levels, then build up its kinetic energy until it is ready to spring load into the end of the year. Traditionally, IWM outperforms the Russell outperforms the other indexes during the last 3 months of the year. We'll see if we get something similar going into this year, and we'll see. So I'm liking what this is showing me right now. We're kind of getting a little bit of a tick up here on the daily market forecast, which is positive. Over the longer term on a weekly chart, we're in an uptrend. And so we're just waiting for that pullback into the proper level. And then right now, basing, and we'll look for a launch upward. If it fails at the 20, that could pull these moving averages down and we could drop down further. So where would I expect it to go? Maybe down to its past breakout area. So Steve, that's what I've got on the indexes. I would say cautiously bullish with the expectation. I'm not in the buy mode right now, particularly. I want to see a pullback to basically where I can buy something at a wholesale rather than a retail value. So
okay, sure, I agree. I don't disagree with that, although I'm a little bit more aggressive. The market, like you point out, is bullish. So in the bullish mode, I take things that set up according to my rules, and I take the trades, tight stops, and just manage the trades.
Speaking of which, here we go. PKI is one of the ones. Now, I'm not familiar with PKI. I haven't got a clue what they do.
This is Perkin-Elmer, and it's basically a COVID play. They're a biotech supplier of equipment and mostly equipment to the biotech industry.
Okay.
And I think getting ready for ramping up vaccine production, I'm sure that these guys will benefit in a big way. It's been in a nice trend for about a month and a half. It's pulling back right to the 80 MA, looking like it's putting in a reversal bar.
Right.
And on the daily. And I like today's action. It was an entry for me above yesterday's hammer high.
Okay.
So it's my classic entry. I like pullbacks, and I like to enter after buying comes in, confirms that a reversal has occurred.
Okay, so you're currently in this stock.
Yeah, I just got into it today.
Okay, cool. So that's it, guys. PKI.
Right. There's another pick that looks very similar called APPS. It's a recent addition to the IBD 50, and it also had a nice pullback. It's having a nice pullback after a nice trend. So it's the kind of entries that I like. Yeah.
Now, see, this one I like better than the other one.
Mm-hmm.
And the reason why is because the moving averages are still in the uptrend mode. Where on the other one, we did get across, looked like we were getting a crossover between the 8 and the 20 to the downside. And it is functioning as a level of resistance. But apps is looking kind of good. We're getting, I agree. I mean, we are getting a really nice momentum is finding support. I'd like to see the market forecast turn back around, but this is definitely, if it fails here, it's got another bounce here around the 32, down a ways. Now that is more than, 5% away, but yeah, it looks pretty good. And so one of the other reasons why on this one, we may get more of a pullback is that weekly chart, or weekly, if it closes where it is right now, that is a bearish engulfing. But does that mean it's going to fall out of the sky and die? No, not necessarily. It just means it may find another level of support, which is about there. It looks like about 2075, which will just give you a better entry. And so, yeah, I like it, Steve. That's awesome.
And another thing I like about it in particular, although it's I think it's a relatively new company, it's got very good option volume and activity and liquidity. So I like stocks that where I can go either with shares or with options.
That's and if you look at it, learn to trade options. Sometimes, if you've got good open interest, these lower price stocks can really work well. I also encourage people to take a look at trading options on the ETFs for the indexes.
Open interest is very high. 2,500 contracts open for the September at the money calls.
Okay. Now here is a special for you guys. Now I don't normally do this because at this particular video, but if you are a Tesla lover, so when's Elon Musk going to move the factory out of California and move it back to Texas? I understand that that's on the way. People in Texas told him to leave his politics in California, though. The question is, basically, what tends to happen after a entity, especially a big entity like Tesla, stock split 5-to-1? Okay, that means this $2,000 will now be worth about $500 for a share, or $400 for a share. The chart will look the same. However, what tends to happen after the split is you get basically what sets in is what they call post-split depression, and price action will sometimes dive a lot, but all of this move from here up to here has been primarily the hype of the split. So if you own this stock, you may want to be, take a double look this weekend and say, hey, where might I want to take some profits? And then, and let the trade reset itself to jump in, because I think Tesla's going to continue to be a strong player going forward. And wasn't it just open and put into the Investor Business Daily? I think it was just put onto the top 20, I think, or big cap 20. And then the other one is our buddy Apple. Apple continues to delight. However, look what's going on with Apple. Yeah, we continue to push up. This one provides a couple of really good indications of what happens when prices get above the 3 standard deviations. Sometimes the price action can just ride back above it. Then you get your close below, and it's going to go to either one or two places. One, the next line down, or sometimes down all the way to the 20-day moving average. That's a total reversion to the mean of this particular indicator. So anticipate something similar. So oftentimes what will happen is you'll get the split, and the next day after, and you'll get the next day after, the charts don't catch up with the split. And so sometimes you have to, put in a day, well, not a day, but the next day, 2 days after the split is when the charts oftentimes catch up. It's a lot better than it used to be, but yeah, I used to trade splits back in the earlier 2000s when there was a lot of them. But I'm anticipating. What do you anticipate? Where is Apple a bargain? The bargain is down here about the 472. Just divide that by 4, and I'll give you exactly the price where it's a bargain. I'll do the math for you. 470 divide by 4. The value point approximately for Apple will be down at about $118. And again, you're looking for the reversal back up of what other support. So like I said, I don't normally share that kind of stuff with the during this session. But, I know some people are, they're long both Tesla and or Apple. And I wanted to just provide a picture of what you could potentially, again, look for. So let's close this all off. Yeah, hey, I just want to highlight, hey, here's one of our top trade journals and trade log from Active Trend Trading. My son has rolled this together. It is excellent. It's one of the top sellers on Amazon, top trade journal on Amazon. I will put a link for, it comes in two sizes, one a little small, one, a small one and one, the size, not illegal, but a standard size piece of paper, size 8.5 by 11. And I'll put a link down in the description on the YouTube channel and also provide that when I send out the video. But excellent work by my son, Brandon. Very proud of him. So learn to focus on the process, the profits will follow. What's really interesting, one thing that I really like about working with Steve is we both have similar, but not necessarily the same process. We both are profitable at, in sometimes different ways, but oftentimes very similar ways. And you'll find that about swing trading. There's different ways to swing trade, but it still comes back to some very basics. And I know that Steve is very religious about following his rules. Because, that's the number one thing that Alexander Elder says that, hurt, people who are just learning how to trade or intermediate traders, even long-time traders, is they fail to follow their rules, especially for stop losses, and they wind up getting their face ripped off. And then it's no fun. It's no fun to lose money that you don't have to lose. And so, again, if you want, more information about how to avoid that, drop me a note. So, hey, in the comments section of this, would additional trading on using the True Strength Index and market focus help you in your trading? If the answer is yes, just put in a yes in the comments. I'd appreciate that. And if you say no, I use something else, that's cool too. That's cool too. If you do say no, tell me what type of indicators you all are using. Thanks, Mark. So remember, if you join us on YouTube, subscribe, hit the bell to catch up on the content, and give us a thumbs up to say, hey, we like your content. And I know you engineering types who do not like to leave thumbs up on YouTube or any social media, but guys, it really helps us out. What it does for us is through YouTube, we're able to, it helps us keep basically our prices down on our regular subscriptions. And so anyway, do that for me and recommend it and suggest it over. So if you want to know more, or if maybe you want a select high-powered list, the Power Rank Elite Top 5 is a great way to go. One, you can put your trades on autopilot. Is anybody who's been using the Power Rank Top 5, how's it been working for you? You've been getting some profits on it. I think, Jeffrey, you mentioned DOCU. You got some profits on that this week. I know, Mark, you're using it. So, but if you want more information, go to this website down here, activetrendtrading.com/top 5. It'll really pay you to help put your trades on autopilot. So that's it for today. We ran a little bit over, but we covered a lot of stuff. Steve, thank you very much. I want to remind everybody, aloha, trade well and prosper. Have a great weekend. If you're in Hawaii, just have a great weekend hanging out at home, because we're under quarantine again. And Steve, thank you very much, my friend.
Thank you, Dennis. Take care.
Okay, aloha. God bless everybody.